It's the end of an era.
The committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%.
Federal Reserve Chair Jerome Powell announcing the first cut in the bank's main interest rate for 4 years, capping an extraordinary period in economic history.
Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%.
The Fed raised that rate to drive down the highest inflation for 40 years after post-pandemic consumer demand sent prices soaring. But when inflation recedes, that doesn't mean prices go back to where they were, and some are still rising. In July, eggs cost around a fifth more than a year earlier. Motor insurance rose almost as much, and streaming subscriptions were up nearly 10%. But remember, all these prices the government tracks are averages. Disney Plus hiked its monthly ad-free subscription by 27% last year, and in October will do it again by another 14%. But the flip side is that some prices have declined. Used vehicle prices are down nearly 11%. Smartphone prices have also dropped, if a bit less. And if some foods like eggs have shot up, apples dropped more than 14% over the past year. So how has this extraordinary period of inflation changed our spending and consumption habits? Even though the cost of travel has dropped with declining inflation, I still find it very pricey. But that's with 3 kids to factor in. The cost of eating out remains elevated, so I think twice about dining out. And my Netflix plan is going to be around $20 a month. That's too high to justify, so that's got to go. If I've changed some of my spending habits, what about other consumers?
I am kind of cutting those streaming services, those extra subscriptions and stuff. Really, the first thing I'm cutting for the most part. Yeah.
And I'm not buying this much clothes.
Things that I normally would buy, maybe I didn't buy, but I mean like bacon. When I saw the prices go up, so that did kind of change a little bit, but I could kind of stop and start eating properly.
The Fed's focus is now on keeping unemployment low by cutting that benchmark rate more to reduce borrowing costs further so growing businesses can hire workers.
You see growth at a solid rate, you see inflation coming down, and you see a labor market that's still at very solid levels.
Owen, Fairclough, CGTN, Maryland.